Hello to everybody, our readers, our supporters. FutureTrend channel is back to you, and today's 17th of July 2019. We are ready to present our everyday's point of view of how we trade major currencies in the world financial markets. As regarding today, as you could see, the economic calendar is looking rather empty, and despite probably of the UK consumer price report, or probably Australian jobs report that should be published during overnight hours, there are no any kind of fresh momentum in the economic calendar. So let's focus our attention on fundamental factors and technical factors. As regarding fundamental factors, we should understand that the United States dollar now is in a much better position than, for example, other major currencies from J7 or J10 universe. And that's because the last portion of economic data coming from the United States were much better than the market expected, and that despite of the dovish tone of the United States central banker. And you know that NFP consumer price index inflation numbers and even yesterday's retail sales, all of them outperformed the expected numbers, and that means that probably the United States Central Bank now should be in a position to perform only an insurance rate cut during next its rate setting meeting that's scheduled for the end of July, and they could perform only one-off kind of insurance rate cut, and for sure it will not be a half-point reduction. It should be only a quarter-point reduction. And what's important now, the United States Central Bank is in a position of insurance rates cuts, but not in the position of initiating of any kind of longer term lowering of its interest rate. So that means that a United States dollar should perform quite better than any kind of its alliance. So as regarding the technical picture, let's see the situation now. We know that yesterday's economic numbers coming from Eurozone, and first of all we should concentrate our attention regarding the German Institute Zurich, regarding its future economic perspective in Germany. You know that this indicator came in below expectations. So all in all, now the euro is in a position probably from a longer term speaking, not speaking about just today, but speaking about next couple of days, even in a position to retest its the lows of this year, that's located around 111. But of course, the euro currency should find a lot of really strong bids around this level. So at the moment, it's hard to suggest that the euro currency will easily break this level to the downside. So let's see. But once again, from a point of view of this range trading, we are inside of it. Let's say starting from November last year, the euro is in a position to be in a range roughly between 111 and 114. So these three big figures should give you an opportunity to accumulate fresh long positions even around this level and increase it in case of dipping to 111, and after that expect any kind of rebound of 2-3 figures to the upside, and that should give you an opportunity to lock with a more or less moderate profit. As regarding longer term, there is a downtrend line in the currency, longer term one, located at 114.80. That type of downtrend was drawn from the highs of 2018 that were printed in February around 125.5, to be correct 125.55. And also we should note that there is moving average 200 daily line located at 113.19, and also this level should present for you a kind of a fresh and strong resistance. Next currency is dollar yen among the majors, also still really very stable. We suggest that any kind of rebound closer to the level of 109 should give you an opportunity to sell the dollar yen, because we suggest that from a longer term point of view there is just only one support for the dollar yen in the form of more aggressive United States Central Bank, or let's say, correctly speaking, less aggressive to cut its interest rate. But once again, from the point of view of risk aversion, from the point of view of such bad news like still no deal in between United States and China, or Brexit negotiations and uncertainties, all in all, the Japanese currency, and you know the Japanese currency has a status of safe haven. From that point of view, it should remain quite stable and quite supported in the meantime. Sterling, we just told about unpredictability from the point of view of Brexit. And now you know that after yesterday's debates of possible two candidates for the Prime Minister role, we know that both of them told that it will be quite possible that at the deadline of current pause that's scheduled for the 31st of October, a no-deal Brexit, it's quite possible scenario. And from that point of view, the sterling, despite of stronger readings of economic indicators in the UK yesterday, you know that average hour earnings came at above expectations, and also today's UK CPI numbers, in case of better reading, should not present a kind of supporting factor for the UK currency at the moment, because all in all here the driving force is political instability and Brexit uncertainties. And from this point of view, the sterling should remain weak and should aim, let's see, from the point of view of bearish continuation, should aim even for the lows that was printed in you remember that year 2016, the starting point of Brexit negotiations, you know, that plunge to below the level of 120. So all in all, it's possible that we are ready to retest psychological barrier 120 during next types of during next sessions. And dollar Swiss, this type of currency, despite of these uncertainties, should remain supported from the risk aversion point of view, and should perform much better than some other major currencies, comparing, for example, to the euro or sterling. There is a kind of downtrend line in the currency located at 99.15, and at the same time we also acknowledged a current immediate kind of uptrend line at 98.30. All in all, probably this type of currency should remain inside of this range. But once again, there is, friends, there is commodity block of currencies that are really much interesting at the moment compared to the quite stable majors. Among them, only sterling is at the moment is a driving currency, moving currency. That's quite volatile because of instability in the UK with Brexit negotiation process. And once again, let's speak a little bit about commodity block of currencies, where we suggest that this night Australia employment numbers could surprise to the upside. What does it mean for you if you are in the position or with the Aussie? We suggest that it's time to buy the Aussie because we suggest that, first of all, last RBA meetings were more or less neutral, not so bad as some of market analytics expected. And that means that in case of better reading of recent economic numbers coming from Australia, it should produce a kind of positive upside surprise for the Aussie dollar. And let's see the chart, by the way, of these two types of currencies. You know that Kiwi, Aussie and Loonie, both of these currencies are outperformers. Let's see the chart. Let's start from the Australian dollar. Despite of that we are a little bit lower from the highs of previous trading session located at 70.45, we suggest that it's time to buy the Australian dollar. Of course, in case of bad reading of employment report, Australian employment report, once again the Australian dollar could come under additional selling pressure. Anyway, you also can draw a kind of recent uptrend line in the currency. Let's do that. And this uptrend line, the moment located at 69.40. So we suggest that despite of possible bad reading of readings of employment report from Australia, it should give you an opportunity to buy the pound in case of dipping to below 69.50. As you could see, this is our suggestion to trade the Aussie dollar at the moment. And also we still continue to have a long position in the Kiwi dollar, because from the long term point of view we should understand that this type of currency is trading first of all slightly above its moving average 200 daily line, and in case of a real breaking and real closing above that level, we are in the process of eroding this moving average 200 daily line at the moment. We suggest that should give you an opportunity to retest the important barrier of 69, where lies a lot of good offers in the Kiwi dollar. The Loonie also, despite of yesterday's move to the upside to the level of 131, despite of that, while below its immediate kind of downtrend line located at 32, should remain under the selling pressure. And once again, today is the day of publication of Canadian Consumer Price Index together with UK inflation numbers. So we pay your attention to these numbers because you know that recent economic indicators coming from Canada were quite good, and together with a more neutral position of Bank of Canada, that should give you another trading opportunity. In case of better reading, of course, the Canadian dollar could even test its strong barrier located around psychological important barrier 130, and once again we noted a kind of uptrend line at 129.50, where lies an uptrend line drawn from the lows printed in September 2017. Don't forget about that. So all in all, in case of breaking below that level of 29.50 and closing below that level, that should give you another opportunity to trade the dollar Canada lower from here. And for those of you who are looking for fresh opportunities to trade exotic currencies, here it is. Bitcoin is under pressure at the moment because you know, the plans of Facebook to initiate its own cryptocurrency. All in all, now United States lawmakers still mulling the situation, and a lot will depend on the results of this lawmakers process. So all in all, because of this, Bitcoin continue to remain quite volatile at the moment. And for those of you who trade this type of currency, you should pay attention especially to these news. Thank you, our readers and subscribers and supporters, for all of your efforts to support our channel. Thank you, take care, and bye bye for now.